Good morning. Thank you for joining today's webinar. As a reminder, we go live twice a day, once in the morning at 10 a.m. Pacific time, and a second time at 1 p.m. Pacific time. Today, we're going to answer your questions. We're also going to go over a scenario using our online solo 401k contribution calculator regarding how to maximize voluntary after-tax solo 401k contributions for tax year 2024 and 2025 for a business tax as a sole proprietorship, whether it's an LLC tax as a sole proprietorship, or if you're an independent contractor, you're going to need to file a Schedule C, and that's what's going to drive how much you can contribute to the solo 401k on a voluntary after-tax basis and then convert that over to the Roth solo 401k. So again, we're going to do a live calculation here of how to maximize voluntary after-tax solo 401k contributions so that you can then convert those over to the Roth solo 401k or even to a Roth IRA. And we're going to hone in on a Schedule C, which is the tax return filed for an independent contractor, a sole proprietorship, or an LLC tax as a sole proprietorship. Let's talk about a few items before we go to our online calculator to perform the voluntary after-tax solo 401k contribution calculation. So, voluntary after-tax solo 401k contributions are allowed all the way up to the overall limit for the year. So for instance, for 2024, the overall contribution limit to the solo 401k is $69,000. For 2025, it's $70,000. You're going to see that the catch-up contribution of $7,500, that doesn't get included with the voluntary after-tax solo 401k contribution. That catch-up contribution is for those age 50 or older. And catch-up contributions are not allowed to be deposited to the voluntary after-tax solo 401k. Instead, they have to be deposited to the pre-tax solo 401k bucket or to the Roth solo 401k bucket. So in sum, the maximum that you can contribute to a solo 401k on a voluntary after-tax basis as part of the Mega Backdoor Roth strategy is $69,000 for 2024, $70,000 for 2025, and you cannot contribute the catch-up to the voluntary after-tax solo 401k for those age 50 or older. What is more, when making voluntary after-tax solo 401k contributions, they first have to be deposited to the voluntary after-tax solo 401k holding account. So the bank account or the brokerage account labeled to hold those voluntary after-tax solo 401k funds. Once they're in that voluntary after-tax solo 401k bucket or holding account, you can then convert them over to the Roth solo 401k or to a Roth IRA. Also, each participant in the plan can utilize the voluntary after-tax solo 401k contribution. For instance, you may have an LLC tax as a sole proprietorship and both spouses are participating in the same plan because they both work in the same LLC. Therefore, each spouse would file a separate Schedule C if the LLC has elected sole proprietorship tax status. And the voluntary after-tax solo 401k contributions would then be based on each separate spouse's line 31 Schedule C income. Okay, let's keep moving on here. So as we discussed, for 2024, the maximum overall contribution is $69,000, and that entire $69,000 can be deposited to the voluntary after-tax solo 401k bucket and then converted to the Roth solo 401k. for 2025, it increased by $1,000 to $70,000. So now we're going to go to our calculator and do an example here. So first we're going to do an example for tax year 2024. So in order to maximize the full voluntary after-tax solo 401k contribution for tax year 2024, you're going to need to report at least $74,246 of net self-employment income. So line 31 of your Schedule C, you're going to need to report this amount, $74,246. Let's go to our calculator and plug this amount in. Let's see here. Give me a moment here. So that's 74,246. Okay, here is our calculator, the solo 401k contribution calculator. So we're going to plug in, again, we're doing a calculation for maximizing voluntary after-tax solo 401k contributions for tax year 2024 for a sole proprietorship or LLC taxes as a sole proprietorship. So the maximum income we're going to need on line 31 of that Schedule C is going to be $74,246. So $74,246. As far as age, don't worry about entering an age because, again, you can now make catch-up contributions to the voluntary after-tax solo 401k bucket. So $74,246, we're going to select sole proprietorship. Plan year, we're talking about 2024, so we're going to select that. Click on calculate. Okay. So the calculator here breaks it down for us. See if I can blow this up a little bit so you can see it better. So based on $74,246, you're going to have to subtract 1/2 of self-employment income tax. And the calculator does that for you. It subtracts 1/2 of self-employment income tax from that $74,246 figure. And then we get a total net self-employment income of $69,000. So you can contribute this entire $69,000 to the voluntary after-tax solo 401k bucket and then convert it to the Roth solo 401k or the Roth IRA. So that's the overall limit. Of course, if you make this entire $69,000 as a voluntary after-tax solo 401k contribution, you can't contribute any more. So you're not going to be able to contribute any Roth solo 401k funds or pre-tax solo 401k funds because the overall limit for tax year 2024 is $69,000 based on the $74,246. Now, to throw a curveball here, remember I talked about the catch-up contribution? Well, this is an example of a calculation of someone who's under age 50. But if someone is age 50 or older, they could also do the catch-up contribution of $7,500 if they have enough net self-employment income up to the $76,500 contribution limit for 2024. But again, this presentation is honing in on just maximizing voluntary after-tax solo 401k contributions. In future webinars, we'll do an example of those who are trying to maximize both pre-tax contributions as well as voluntary after-tax contributions. But again, the overall limit is $69,000. So you're going to need at least $74,246 of line 31 Schedule C for 2024 in order to maximize the $69,000 voluntary after-tax solo 401k contribution. Let's do another example here for 2024. Let's say you make instead of, let's say you make $50,000, or you pay yourself $50,000 of Schedule C line 31 income for 2024. So let's put in 50,000. Sole proprietorship, tax year 2024, click on calculate. Okay, so based on $50,000 of line 31, the key here to maximizing the voluntary after-tax solo 401k contribution and understanding how it works is that for a sole proprietorship or LLC taxed as a sole proprietorship, you have to, the calculator will reduce that 50,000 line 31 by the required 1/2 of self-employment income tax. So in this case, 1/2 of self-employment income tax is 3,532.39. So that gets subtracted from that 50,000, resulting in self-employment income of 46,467. And this is the amount that you can contribute as a voluntary after-tax solo 401k contribution. That 46,467 and 61 cents is the maximum you're going to be able to contribute if you only report $50,000 of line 31 Schedule C net self-employment income. Okay, let's do a calculation for tax year 2025. So for 2025, you're going to need at least $75,325 of line 31 Schedule C income in order to fully maximize the 70,000 overall contribution limit and voluntary after-tax solo 401k contributions for 2025. So let's plug in that figure of 75,325. We're going to select sole proprietorship, plan year 2025, click on calculate. Okay, so here we go. We plugged in $75,325. The calculator then reduced that $75,325 by 1/2 of self-employment income tax, which is $5,321.54. Therefore, the maximum you can contribute is $70,000. Again, the overall limit is $70,000 for 2025. You cannot contribute any more than that as a voluntary after-tax solo 401k contribution, which would then get converted to the Roth solo 401k or the Roth IRA. So you wouldn't be able to contribute any pre-tax employer contributions or any Roth solo 401k employee contributions or pre-tax employee contributions, because the overall limit is $70,000. So you would have exhausted your overall limit by contributing the full $70,000 to the voluntary after-tax solo 401k bucket. Okay, so let's do an example of $50,000 as well for 2025. So you can see the difference in amounts. So we're going to plug in $50,000 of line 31 Schedule C income. We're going to select sole proprietorship. Again, this is for plan year 2025. We'll click on calculate. So here it is, $50,000 is what was plugged in. It subtracts 1/2 of self-employment income tax. The calculator does that work for you. So you subtract that $3,532.39 of 1/2 of self-employment income tax from $50,000, resulting in $46,467.61 of self-employment income. This is the total amount that you can make as a voluntary after-tax solo 401k contribution for 2025. That's $46,467.61. That would be all that you can contribute. In order to contribute more than that, you're going to have to make more than $50,000 in net self-employment income. Okay, you can visit our calculator on our website, and you can utilize it for both tax year 24 and 2025. So 2024 and 2025. Okay, let's go over some of your questions here as well. Give me a moment here. Before we do that, though, let's finish talking about the making voluntary after-tax solo 401k contributions for sole proprietorship. So in review, you still have time to make voluntary after-tax solo 401k contributions for tax year 2024. As a matter of fact, you still have time to even open a solo 401k plan here in 2025 so that you can make voluntary after-tax solo 401k contributions for 2024 by your business tax return due date, which would be April 15 of 2025, or if you file for an extension, you would have until October 15 of 2025 to make those voluntary after-tax solo 401k contributions for tax year 2024. So again, if you already have a solo 401k plan, then this also applies to you. You have until October 15 of 2025 to make voluntary after-tax solo 401k contributions and then convert them over to the Roth solo 401k or to the Roth IRA. Or if you're opening a solo 401k for the first time, you can do it now here in 2025 as well by April 15 of 2025. Similarly, if you have an existing solo 401k plan already, let's say over at a Census or even at Fidelity or Schwab, for instance, then you can restate that plan over to our solo 401k plan, and you would qualify for making voluntary after-tax solo 401k contributions for tax year 2024. So let's say you have a solo 401k over at a Census that you opened or restated to a Census from Vanguard last year in 2024. Now here in 2025, you want to switch from that Census solo 401k plan over to a solo 401k plan from my solo 401k financial. We would restate that plan here effective 2025, and you would still be able to make voluntary after-tax solo 401k contributions for tax year 2024. Okay, let's take a look at some live questions here. Give me a moment here. Okay, let's see here what we have. Here's a question here. I have a solo 401k account at Fidelity through you. I have a checkbook control over that account. Have you seen clients able to ACH money out of their Fidelity accounts or checkbook control? Alternative, I'm looking to open an actual bank account, but I haven't received the necessary paperwork for that. Great question. So you can ACH money into Fidelity for making annual contributions to the solo 401k, for example. If you have a solo 401k with us and you use Fidelity's non-prototype investment-only brokerage accounts. However, you cannot ACH money out. You can wire money out of Fidelity if you want, or you can use a checkbook. For instance, if you're looking to make an alternative investments in real estate or a promissory note, for instance, you would submit a wire directive to have the money wired out of that Fidelity brokerage account for that investment. Similarly, let's say you want to wire money out because you're taking a distribution from the solo 401k and you qualify. You could do that as well. If you want to open up a bank account as well for the solo 401k, go ahead and submit a support ticket through our website, and we'll go ahead and send you over a banking guide and the applicable documents to take to your local bank to open up that bank account. Let me send over a link to our support ticket. Okay. I just sent that link over. See if we have any other questions here. Okay, here's another follow-up question. I'm also getting ready to invest into real estate syndication from this solo 401k. What paperwork do I need to file with you for recording, record-keeping purposes before I make the investment? You don't need to file any paperwork with us. You need to just make sure that all the investment documents, like the private offering memorandum, lists the solo 401k as the investor, and that you also provide the employer identification number for the solo 401k, as the private fund and sponsor is going to require that when they issue the Schedule K1 for that investment made by the solo 401k plan. But no, you don't need to submit any paperwork to us. As the trustee of the solo 401k plan, you're going to safekeep those investment documents. You don't submit those to Fidelity either. Let me send you over the private investment procedure so that you can follow that procedure. I'm also going to send you a link from our website that you can use for placing that investment, where you're going to be able to submit that wire directive to Fidelity to have them wire the funds from that pre-tax solo 401k brokerage account to the private syndicated investment sponsor. It's got to flow directly to that investment sponsor, and Fidelity will wire those funds out. Let me pull that up here. I'm going to search for it on our website. Here we go. I'm going to send you a couple links over. Here's the first one. One moment while I dig up the second one. Just digging this up here for you. Give me a moment, please. Okay, here's the second link that explains how to fill out the form line by line so that you can make that private investment from that Fidelity brokerage account. There's that second link there. Okay, let's see what other questions we have. Here's a question from Nate. I got an instructional video to set up Fidelity Solo 401k. My wife and I are co-trustees. Does this mean we have to fill out the paper form with Fidelity? There's a question if there's more than one trustee, and if you mark yes, then make to fill out paper submission form. Can I just do online accounting out a trustee later? Good question. I'm going to jot down your information here. Give me a moment here. I'll jot down your information, and I'm going to have our accounts team reach out to you here this morning. Give me one moment here. I'm pulling up your email here on our system. Okay, I have your email here. We'll take a look at this and we'll respond to you today so that we can review your account to make sure we understand exactly what we're working with. So we'll follow up with you here this morning. Additional question here. When making contributions to Fidelity brokerage accounts, do they need to come from a bank account of the business, or can it come from a spouse bank account that is not involved in the business? So contributions to the solo 401k plan have to be based on net self-employment income from your business. It looks like your self-employed business is taxed as a sole proprietorship. So as long as you have the required line 31 Schedule C self-employment income, the contributions can flow from your personal bank account or from the business bank account. What matters is that you have the net self-employment income to support that contribution. And you can make those contributions electronically to those Fidelity brokerage accounts. You can link the bank account to that Fidelity brokerage account so the contribution is made via ACH, so electronically. Let me send over a link to our website that talks about how to fund those Fidelity brokerage accounts via ACH, where they're linked from the bank account to the brokerage accounts. There's that link. Okay. Another question here. It's tax filing season. I'm looking forward to the $1,500 auto contribution credit, $500 for 2024. This will be my first year taking advantage of this credit. What documents or information should I share with my CPA? Go ahead and submit a support ticket so we can confirm that in fact your plan includes the auto contribution credit. If you open the plan with us on January 1st or after of 2024, then that contribution credit is built into the plan already. Submit a support ticket and we'll send you information to determine whether or not it's on there already, which it should be if you open the plan after January 1st of 2024. And then we can also share information as to how to claim that credit on your personal tax, on your business tax return. You're going to have to file Form 8881, for example. We have a video that walks you through that. That form takes no more than 5 minutes to fill out, if that. And we also have a PowerPoint presentation that explains exactly how to fill out that form. Okay, let's see if we have any more questions here today. Follow-up question here. So if Fidelity can do a wire, then I won't need ACH feature. Exactly. If you're trying to place an investment where you're wiring money out of the solo 401k plan for a private syndicate, then no, you don't. You would follow the wire instructions, because ACH is not available for sending money out of the brokerage accounts. That's for sending money into the brokerage accounts. So that procedure I sent over earlier of how to submit that wire directive to Fidelity to have them wire the money directly to the investment sponsor for that private real estate investment is what you need to follow. So no, you do not need a bank account. Okay. So as far as whether the money can flow from your wife's bank account, that's between you and your wife. I mean, I presume that your wife is okay with that. So again, as long as you have enough net self-employment income to support that contribution, that's what matters to the government. Okay, let's go on to the next question here. When you say insure, list the solo 401k as the investor on the investment documents and use the solo 401k EIN, I have to use the name of the trust that I use for setting up my solo 401k with you. That's exactly right. Take a look at that procedure I sent over. Let me share that with you again. Here, this right here gives you step by step. You need to list, remember, a 401k is a retirement trust. So it's the solo 401k making that investment. You're not making the investment, it's the 401k, so you need to list the 401k. You're using 401k funds. Also, you need to use the EIN number for the 401k, which is also a retirement trust. Because again, it's the 401k making the investment, not you. Okay. Okay, good speaking with you today. Again, thank you for joining. We'll be back here at 1 p.m. Pacific time. Until then, have a great day.